all the others now. Oh, we've got them back.
It's also that they.
So, good evening, everyone. Welcome once again to our project webinar. Tonight is on behalf of the Old Woollen Mill. My name is David Johnson. I'm the CEO of LEOcrowdfunding. We are an equity crowdfunding platform. I'm joined first of all by one of our staff, Asher Wiener, who is the head of online social media and marketing. Good evening, Asher. How are you?
Good evening, David. I'm all good. How are you doing?
I can see the sun beaming through your window in the background there.
It's still here. We're not doing these in the nighttime anymore. It's finally it's become that time of year.
It certainly has. And good evening to Suzy. How are you today?
I'm all right, thanks, David. Glad to hear all is good weather-wise with you as well. Like I said earlier, I've been up on a roof in the sunshine today, so wonderful.
Up on a roof in the sunshine. Well, I definitely have not been on a roof. That I can absolutely guarantee you.
I had a touch of the tomato going on.
Well, listen, that's a nice way to be if you get this time of the year and get it going again. That's exactly what you want. So welcome everyone tonight. Thank you for joining us for our project webinar for the Old Woollen Mill. This is about a 40-minute run through on the Old Woollen Mill project Planning Uplift raise that we have currently on the platform. Now, for those of you who have been on these before, you know that these are designed to give you some detailed information about a specific project that we have on the platform for raise. Now, by way of introduction, we always just highlight the fact that LEOcrowdfunding is, you see along the bottom. If you go to our risk warning, you'll get this information in detail, but we are an appointed representative of Sharon Limited, which is authorized and regulated by the Financial Conduct Authority. Pitches for investment are not offered to the public, and investment can only be made by registered investors on the basis of information provided by LEOcrowdfunding. So tonight is one of those times when we are giving information about a project. So let me just initially introduce this, and I'll bring Asher in for a quick comment when I finish. But in terms of planning Uplift project Old Woollen Mill, this is based in North Taunton in Devon. The raise amount is 155,000. There's a minimum of 65,000, which you will see has been reached and exceeded. And the projected return, the projected ROI on this project is 50%. Now, for those of you involved in property, that probably opens your eyes a little bit or raises your eyebrows. That's quite a big ROI. And that's because this is a planning uplift project. This isn't a normal development project. This is planning uplift. So it is a higher risk in terms of investment, but then it also then offers on the other side a higher reward. And we will get into that a bit more as we go along. So Asher, this is something we've been working on now. I know you've worked hard on the social media. You've been promoting this on the different channels. How have you enjoyed this project?
No, it's been really fun. I mean, not only is it, as you can see, a really cool space and, also a really cool project in itself, being an active house scheme, but also working with Suzy has been absolutely lovely. She's very easy to work with and gives me all sorts of content. So it's been really fantastic.
Excellent. So before we introduce Suzy, I know she's keen to get pitching her project and giving more information about her project, but also think about learning. One aspect about these type of projects are that as an investor, you can learn while you potentially learn how to own assets. So there are, I know, a number of people have invested in this project at the minimum amount of £100, so they can take part in the journey, so they can learn how a planning uplift deal gets put together, and then follow it as it goes along. And Suzy will certainly mention a bit more of that in a minute. So without further ado, officially welcome once again to Suzy Jenkins, the fundraiser on this project. So again, fantastic, Suzy, you could join us. Do you want to give us a bit about your background, your journey into property, and so what you're doing now?
As you can see on the slide, I started off as a scientist, but trained as a bricklayer, followed by a carpenter joiner, then a roofer, because I loved working with my hands. However, with the business background, I soon felt dragged towards the more management side of things, which also I found very, very interesting. Stimulating a whole crowd of people to do something on time and to budget is really rewarding. And when you're trying to deliver something to someone, that also has a reward, even if it's a single house, which is your client's dream, or a big development. Regardless, the whole process of getting that over the line is equally fascinating to me. So that's what I tend to do more of these days. But it's quite nice to be able to say, actually, I can do that, so don't try to pull the wool over my eyes. Particularly important as a woman. I do get a little bit of, what?
having been involved with it now for a number of months, and having looked at your CV, and as part of the due diligence process, had a look at the number of projects you were involved in, it would take a very brave person to try and pull the wool over your eyes. I would dare say, Suzy, which is fantastic. And I think your experience and your expertise and your knowledge will come out as we go through the slides tonight, which I think is a very important part of what we're doing tonight. So that's a little bit about obviously your journey into property. In terms of some of the things that you've done more recently as a project manager, etc., just explain maybe some of these projects, please.
Yeah, I have a real thing for listed buildings. That's just me. I love history, and one of the things that I spend an awful lot of time reading about and watching on the television is history. So to be able to work with some of these projects, they've been historical. The two on the right hand side are both historical. One's listed, one was within Christchurch College area in Oxford, so you don't get a lot more historical than that. That what I learned about Christchurch really opened my eyes to the history of Oxford. But the beauty of that particular one was we were making a homeless shelter, so that was the other side of my character, where I like to help anybody I can. There was a thing on LinkedIn earlier today about people crossing the road. It was from Call the Midwife on the television last night. People crossing the road when someone has a tragedy. I'm the person that crosses towards them and talks to them. That's just me. So to be able to build in a historic building and do some real good with it was what I did for the construction company that is owned by Oxford Council. So that was a totally different environment for me, because working for, in essence, a council is very different from the private environment. The one on the left hand side is a special needs school in Bourne End. Lovely job, because all of the children, every single one was different and a character, and they were really enthusiastic about what we were doing. And they, with all of their combined special needs, it made it even more rewarding than doing a normal school. So I suppose the last few years have been much more commercially orientated for me than previously, when I've done smaller things or things for private developers. So it's been a real knowledge experience, and I thoroughly enjoyed it.
Yeah, no, absolutely fantastic. And Asher, you've obviously been sort of talking about Suzy's background and her history and promoting her various deals. So you've also been looking at these deals, and it's a wealth of background to be able to tap into to promote Suzy as a fundraiser.
Oh no, completely. And I think me and Suzy were talking just the other day, and she had taught me some things. You know, I studied, I got a degree in Nottingham for property planning and development, and Suzy's taught me a handful of new things, even in, things that I was completely unaware of through my years of university, and even in my couple of years of experience. And it's amazing to learn from Suzy. And I think that I guess going on this project, you will I'm sure be able to broaden your knowledge substantially just following it.
Yeah,
it works both ways, though. I've learned from Asher. I didn't understand the world of social media at all and how to do all of this sort of thing, and Asher's taught me very well.
Yeah, no, it's good. That's one of the advantages of fundraising through a crowdfunding platform. So the video is sort of playing in the background, guys. You can have a look in there, and Suzy's taking footage to give you a bit more context. But Suzy, talk us through sort of briefly, how you sourced the project and the current situation. Where's the project up to?
Right. I've told this story quite a few times, so I'll be very brief. My father absolutely loves watermills, and we found it looking for an exciting project. We found it just looking for watermills because it's something we periodically did. This one is a far bigger watermill than the little cottage that he wanted, but he has his watermill. It's the opportunity to do the listed and the ultramodern. I became experienced in the ultramodern a few years ago, well, 20 odd years ago, when there was a thing with listed buildings that if you built on them or adjacent to them, it had to really stand out as being brand new rather than copy what was there before. And that made me have a whole new learning experience away from my historical buildings. So this one gives me the opportunity to sort of mix it a bit, do the really ultra modern, but make it look right with the listed buildings, which I think is very exciting. And that's what we're working on at the moment. How do we plan the new builds so that they enhance the historical ones? We are in the final stages of the flood reporting, which for this particular one is vital. Obviously, with it being surrounded by water, we have to make sure that we start from that point. Because if we started saying, well, we can put houses here, there and everywhere, and then we got the flood report, we'd have to go all the way back to square one. So we've started flood report, ecology, all of the stuff that we need to care about and make sure that we design around, we're doing first. Then we'll work out where everything goes. And we've binned what was previously approved because we don't want to influence ourselves by looking at that and saying, well, this is how it should be laid out. The only thing that we will obviously listen to is what they've done for highways, because if highways were happy with it before, then we should have a little less uphill off them with what we want to do. So the front bit will be the same.
So your desired aim then is to achieve the planning and to obviously oversee the building out of the units on this site. That is your desired aim, yeah?
I want to save the mill. Look at it. It's an absolute, well, tragedy in my eyes to see it in the state it's in at the moment. This building just coming into shot here. The windows are glorious. The stonework is beautiful. Whether we can still save it, I'm a little bit unsure, because it previously had some massive steelwork that was holding it all together and all sorts, which has gone. But we'll try.
Okay.
And if we can't, we'll make it look right.
Yeah, okay. So again, there's some footage playing in the background from a different angle, giving a bit more about the area.
Look at the views. Look at that. You'll see we've done some mowing.
Yeah, it looks a lot cleaner than the first videos that you sent. But is this the sort of views that you'd be getting, you know, from the
new builds? Yeah, this is the other bit we're looking at the moment. Where are the views? Where do we want the houses to look?
Sure.
Because again, that's important, isn't it? You want the whole selling point of the new builds is that they are down here in Devon with a view. So we need to maximize the views as far as possible. So that's again, what direction are all the views in? Can we group houses to have the best views?
Very good.
And that was part of the process for the videos.
Yeah, no, excellent. So what got you interested in crowdfunding? Why did you bring this to us to have it funded?
Well, I've previously done a crowdfunding a few years ago where, well, I didn't, my mum did, but I was the site manager and worked behind the scenes on it all. So the intention was that we purchased the site, we got the planning on it, and we're ready to build out. So in essence, that was the same as we've done here, but you are fairly unique in that we can do a planning uplift project through you, which is why we came to you. Yeah, this is such a community inspired project. It deserved to be crowdfunded to share what we're doing. Yeah, and to involve as many people as we can.
It's a really good point. And that I think it's fair to point out your first raise or other raise you did was a peer-to-peer raise. It wasn't an equity raise. And yes, we are one of very few platforms that offer planning uplift to fundraisers. So yeah, you pointed out well. So you've already covered why this project in terms of just your interest in the mill itself and the area. Let's, in terms of just setting the scene, then we're going to get into the financials and some details, but I think it is only right to highlight the fact that, you know, there are more risk involved with planning than ordinary other projects. So do you want to just outline sort of briefly what those risks are? Obviously there's a 50% ROI projected, which is obviously a high return if it goes well. but there are obviously some things that can sort of scupper this. So you want to just cover those quickly?
Yeah, if you, page 17 of the offer document actually covers the risk analysis that we've done. But part of the process before we started was, it's a brownfield site. It's previously had planning permission that's lapsed for more than we want to do. I've spoken to the local community, and they didn't like the design. They're bored of all of these houses all looking exactly the same, and their towns becoming surrounded by boxes. So doing what we're doing is something different. So we should have community backing, which is one of the hurdles you have to go over. It's previously had planning permission. So again, there is already a permission there that they've gone through, and they're happy for it to be built on. It's in the neighbourhood plan as a consequence. So this land is allocated for housing, which takes a massive amount of the risk. It's not a beautiful green field that nobody wants to build on. It is a site that needs to be built on. And it's because I've engaged the community, and part of what we're doing through the process, doing the 3D walkthrough and having that available online, it means that anybody who's interested can actually sit there and physically see what it will look like from their house, from the road, from within the site, and become a lot more engaged in it. And also the same for the planning officers. So one of the risks with this sort of thing is that the planning officers just don't crack on and do it, which I think is a countrywide problem at the moment. Well, what we're doing is, when this goes in, everything they could possibly want will be there then and there, so that when the planning officer has time to look at it, there shouldn't be anything missing. They should be able to go through the whole thing, see exactly what we want to do, and either become thoroughly enthused in it or hopefully not hate it. But I would imagine they'll love it, because this is the sort of thing that is needed in this area. And they've approved other sites where where they've had similar designs, and they seem to be liking it. So
yeah. Okay, well, we'll come on to the designs just in a second. So again, just to be clear, you've outlined some of the risks that you've managed to mitigate, but just to be very, very specific for the investors on the webinar tonight, the ultimate risk in a planning uplift opportunity is that if planning is refused and then the appeal is refused, well, then the raise is obviously it's failed. There's no project. So there's a 50% projected uplift, if you like, in the ROI, but there is that risk that planning doesn't be approved, and that the appeal also is rejected. So you have to weigh that up with the potential ROI. Okay, so tell us a bit about the actual location. Where is this site?
This was another important consideration for us, because exit is a vital part too, because if we get the planning, we then have to exit. Well, one of the issues in Devon is location, 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 as it is for everywhere. The minute you leave the dual carriageways or the motorways, it becomes twice as long to get a tiny distance, because the roads are tiny. But leading to North Tawson, there is a really nice, fast road that is not a tiny weeny pull into each side. So its location is fabulous for getting to the A30, which then gives you access into Exeter, which is the airport, and the train station, which goes into London. They're about to reopen the line through to Oakhampton, which goes past, and all your major links are there. So it's right down in where you want to be in Devon, access to the beaches and all sorts, but it's also great for getting to the rest of the world. And a lovely village with all sorts of, there's a speciality cheese shop just up the road from the walking distance from the mill. All the sorts of things that people want, farmers market. So people moving to the country, it's got what they want. Locals, it's got what they want. And we want to try to create a development in the planning stage that puts the two together.
Yeah, that sounds good. Okay, so get into a bit of detail then on the actual project as it is. I know there's the two phases of planning. I want to just talk through that and then explain what the sort of the phase 2 application is.
Yeah, we have an option agreement over the whole site, and phase 1 is for the listed buildings. So they've got listed building consent and they're waiting for planning consent, which is being done by the current owners. which is in essence representing what was passed before, because there wasn't much particularly wrong with it, and there was a fair amount of work that went into it. We will be enhancing the historical study and the historical reporting as part of what we're doing, because we think that's important. So in phase 2, it is all of the concrete area and fallen down buildings and all sorts that surround it previously had permission for 40 units. And what we're saying is there's a need for self-build, not self-build where they can build whatever they like, but self-build where they could build active houses in the same style. But it gives people a flexibility to do a bit more. And it's something that the planners are bound to do. And then we're only asking for 30 other dwellings. That is surrounding the listed buildings and is therefore brownfield. Whether we'll encroach into the green space, we don't know yet, because it depends on the flood mapping. But the whole thing will have a beauty of being by the river and with the mill pond and all sorts. So where we are at the moment is designing where everything goes and how it is, while we also wait for the phase 1 planning to come in. But they want to see what is happening with phase 2 before they agree to phase 1, which I think is quite understandable. They know that they're both linked, and that to rescue those old buildings is going to take an awful lot of money, and the project isn't necessarily going to make it. So therefore they have to allow the phase 2 in order to save their buildings.
Yeah, okay. So Asher, I know you're quite into your different types of houses and things like that. So I'll let you introduce the idea behind the design that Suzy's went with, and then you can ask her any questions you want on that.
Sure. I mean, I actually learned about this concept initially through passive houses, which, I mean, if any of you guys don't know, it's the idea of a house that doesn't actually use any electricity, any gas. You know, it's a fully self-sufficient home. However, an active house is a home that actually is so efficient, it actually provides energy back to the grid. So it actually generates energy, not only in order to heat and you know, power the home, but also it actually is you know, great for the environment, and you know, they're extremely insulated and really, really incredible. And I personally am a huge fan.
Me too.
And Suzy, we've discussed that obviously post-COVID and this sort of new normal everyone talks about, that this type of house, you know, all the statistics, all the articles from the various magazines and online sites are talking about these are the type of houses people are looking at post-COVID.
Yeah,
So
yeah, I think so. It's healthy living, isn't it? It's brought home to us being stuck in our boxes. That actually, do we really want to live in boxes? And is that detrimental to our good health? We probably didn't realize, did we? Because most people come home from work, do a bit, watch the telly, go to work the next day. But when you have to stay at home all day, you realize what you're living in and how potentially it's draining you. So
very much so your team, you're obviously
very important people,
vital on planning particularly. So it's almost, you know, they're key. So yeah, so introduce us to your team behind the team.
Eric is Passive House. He is a Passive House guru, but he's also local. And Mel is fabulous. She's a very, very bright, engaging person and has worked for many of the big estate agents. So from a marketing point of view, which is part of what we're doing at the same, we have to market to the local community for their buy-in for the planning. And we have to essentially market for our exit. So Mel will be absolutely crucial in that. And it's what she does all day, every day. And because of what she's done as a developer herself, she's also engaged in what we're doing. She understands what we're trying to do and what we need to achieve. And Eric is just a fabulous architect. I can't really say much more. But we also have our planning consultant, who again is very, very important to the team, but he's a little shy, hence there's no picture.
Yeah, very good, very good. What's really important, I think, when it comes to planning uplifts is obviously the timeline. Investors want to know, you know, when is phase 2 going to be submitted? How long is it going to maybe take? what happens if it's rejected, etc. So on the screen there now is quite a detailed timeline that Suzy has provided, and I think it lays out quite simply and straightforward the timeline. But I suppose just to clarify one point, Suzy, you're going to submit the application for phase 2. How long do you expect before you hear if that has been accepted on the first round?
We've allowed it 26 weeks, which is what they are allowed. With a bit of luck, we'll be able to give an investor update far sooner, saying they love it. This is what we hope.
Yeah. And if, for instance, something needs tweaked, or there's something they're not happy with, and planning is initially rejected, you're then going to go to the second 12-month period and resubmit on appeal. It's the next 26 weeks. So we've got the 26 weeks. You'll see it on the Gantt chart. It gives 26 weeks for the first set of planning. If we don't get that planning in the 26 weeks, we will go straight to appeal. No time like, because if they're messing about and they're not determining it without good reason, we'll go straight to appeal. If they've got good reason, we'll address it and hopefully won't need the appeal. But the reason that we've got the whole 12 months, because as you see, it doesn't take up 24 months. But there's the possibility that we will give them a bit of wriggle room in between the 26 weeks and immediately submitting for appeal if they have things that they want us to tweak. But hopefully they won't. Hopefully that will all be done within the first 26 weeks, and that'll be it, signed and sealed. But life is never quite perfect, is it? Yeah, no, absolutely. And it is important that investors sort of realize that your expectations are sooner than that, but you have allowed in your budgeting and in your plan, if you like, a 24-month period. So if you simplicity, first application 12 months, if that's rejected and there's appeal, potentially another 12 months, giving it a 12 to 24 month project. That's important when it comes to the ROI. So obviously the project, Suzy, is all about raising the funds to actually submit the phase 2 application, and you've obviously supplied a breakdown, to the penny of all the fees required. Is there any of those you want to just pick out briefly as the main bits of expenditure making up the 155,266 as the raise?
Yeah, I mean, the top few are essentially the planning fee, which is the application fee, then what the architect and the planning consultant need. The house designing fee is all to do with when you put the planning in, they like to see a cross section through. So you have to go one stage further than a flat drawing. What we're aiming for is that we don't just get planning permission with conditions, because that's valueless. We want planning permission with all conditions discharged, so that the following day we could go and build if we wanted to, or if we were selling the site, whoever buys it then has something they can go and start straight away. Because what we found is that going to the marketplace, people don't want conditions because it's time wasting. They have to get those discharged. If we can get the whole thing done in one go, job done. So in there are things like a fire plan for timber construction. You have to submit that. It is usually a planning condition, but it will be done straight away. We've got let me have a read through my list. Construction phase plan. That's something that a developer has to give, which is all about traffic management and deliveries and all sorts of things. Well, again, it's something they require. Well, fine, they can have it up front. So this is why there's so much there. It is a lot of money because everything is there to allow someone to start the next day once the planning's granted. Well, once they get a building license, which is a week.
Yeah, no, absolutely. And you've allowed obviously for the the appeal budget, etc. Now, just to draw people's attention to this, because Suzy, you and I have discussed this, and I know it was asked in the forums. Someone asked, which is a really good question for an investor. How much skin has Suzy got in the deal? And obviously, if people look down the list here, I mean, you are not charging any fees personally to this application. You're, if you want to call it skin in the game, is you're doing all of this free of charge for the project. And you're also underwriting the difference between the minimum and the max. So the minimum was 65. We're sitting over 100,000. But if where we end up on Wednesday is less than 155, you've gave a commitment to meet the difference, which is absolutely skin in the game. So that's a good thing. We just to clarify to people on that. So yeah, so the equity offer document will give the full breakdown. We'll not spend any more time on that right now because I want to get into the financials. But people can go and see the full breakdown.
And there's the appraisal. There's the appraisal as well, David. So
yes.
In the appendices, it's how we've come up with what we think the value will be. There's a load of research gone into that to make sure that it is actually worthwhile doing in the first place. It's how we assess the project. How we did that is sitting there as well. It's is it page 38 to 45?
Excellent, excellent. Asher, was there any questions specifically about the planning costs?
There is indeed. Actually, Suzy, we've got someone asking, what would the launch costs of 16K cover?
That is all about websites, advertising, all of the associated things that we need to do to make sure that this effectively is saleable before we get to a point where we need to sell it or refinance or whatever we do. It's all the
local and regional awareness.
Sorry?
Is that local and regional awareness, basically?
Yes, in essence. Putting up billboards, putting up hoarding with pretty pictures on, all that sort of thing.
Yeah, okay. Cool. Good. Okay, so let's get on now with the next. Okay, so a bit of the financials, because this is obviously important, and time is good, so we're going to be able to have some time for Q&A at the end. So if you have any other questions, then start putting them in the chat box, or the Q&A box, sorry, not the chat box, into the Q&A, and Asher can keep an eye on those. So in terms of the financials, just so we're really clear on these, people understand, this is obviously an equity investment. No one's making a loan to Suzy. There's no security involved here. This is an equity investment. Excuse me. So the crowd raise is 155,000, and the projected ROI return on that is 50%. So if the project is successfully approved on its first application, then there's 77,500 due back as profit to the investors. So what happens is the SPV that will own the asset or control the asset, they will issue shares. The minimum share price is £100. That's also the minimum investment amount. And one way of calculating this is that if you take the 77,500 and you were to take that as a percentage, you can see on the other side of the screen, projected profit is 2.2 million. So if you were to take the 77,500 as a percentage of projected profit, that would be 3.44. So we just use that as a means of if you like, tangibly explaining a profit share figure of the 50%. But of course, Suzy, it's impossible right now to know what that profit share would be in real terms, because it depends on the GDV at the time. It depends on which exit you choose, which we'll talk about in a minute. So the key thing is it's a 50% priority share. So obviously right now, Suzy, you can't predict exactly what the profit's going to be, because it depends on the exit.
It does, and it depends on what planning we get, what conditions they put on it as far as other commitments, for example, community infrastructure levy, whatever they decide needs to go with it will bring down the perceived profit, but it won't affect what the shareholders are returned, because that is a fixed percentage.
Yeah, but what I do need to really highlight for the attendees and investors, when we talk about this being a priority share, what it means is that the investors receive their 50% return on their investment before Suzy makes any profit. So it's a lot less about what this figure here is. We've put 3.44 if the profit was 2.2 million. But the reality is that what we're looking at is whatever profit comes out of the project, the first 77,500 goes to the investors before Suzy takes anything. So be that by, I'm going to talk about exit now. So I want the people to remember that the first 50% goes to the investors of that 77,500. Okay.
And if it goes to appeal, if it was to go to appeal, then it would be double that would go as a priority to the investors.
Correct. So the end up would be 250s. So in terms of exit, because this is obviously very important, Suzy, when it does come to investors understanding what are the different ways that their investment can bring that 50% return. So what are your different exit strategies?
Well, as it says there, number one is the sale of the self-build plots, because that is an ideal world scenario. Down here, they do tend to be very saleable. So when we were trying to assess how to do this properly, we said, well, the self-build plots are something that the planners are motivated to give. And providing they give that, we can pay back the investment. What then happens to the rest of the site, whether or not they give as many as we want or less, it should still be possible, providing we've got those 10, to pay back all of our priority shareholders. So that is the intention. Sell those plots. The money is put to one side then to buy the site and pay back the priority shareholders. We can then say, okay, we want to build it ourselves, which in an ideal world, I would like to. And hopefully, because there is enough rise in land value through the planning uplift, I will then be able to fund that. The other thing is that if we are developing phase one by then, and we've got far enough along with it, there may be funds available that could pay that 77,000 back. And the same again, if we've already got off-plan sales and reservations, then we can't use that money, but we can leverage against it. So, like I say, it ideally, number one will be our exit strategy. That the project will be, everybody will love it, and they'll want the self-build plots to give themselves a more bespoke house, which is the intention. Because they're fairly bespoke anyway, active houses. To do what we're doing is different and a real outside the box, but also for somebody to be able to come in right at the ground and say, this is how I want my house. I think that's probably something that an awful lot of people will do if given the chance.
Yeah, absolutely. So, okay, no, that was excellent. You can see different potential strategies for exit. And as long as really any one of these 5 work, then the first 77,500 that comes in profit goes to the investors. So, okay, for time, we're not going to, again, dive into your track record, because if people go to the landing pages, they can actually download a document with a whole bunch of your previous projects. But suffice to say, you have done numerous planning projects, particularly ones that involve listed buildings. And there's, you know, a strong track record in that.
And that one there was also within a conservation area. That one you've got up there, that slide, was a conservation area. So again, cross those bridges. But the one thing to point out is that the portfolio that we've got, pages 29 to 36 of the offer document, that is only my planning experience. Obviously, my CV is far bigger. And we haven't put that in because I think we'd probably need a bigger server.
Exactly, very good. Okay, so we'll any questions for Suzy, get them into the Q&A now, and we'll come back to Suzy just at the end. I'm going to just take 5 minutes now to wrap up on some of the registration and actually making your investment issues, just so everyone is fully aware of those. So if you go to our homepage, and you select the old Woollen Mill thumbnail, then this is what you will see next, what we call our pitch pages or our landing pages. And you can see that currently, unless there's been some movement in the last hour, we're at 108,200 raised from 51 different investors. So that's actually fantastic that 51 different people have decided to invest in this project, which I think is one of the advantages of property crowdfunding, that you get this diversity of people from all different backgrounds who look at the information through their own eyes, their own experience, and 51 of them so far have decided to invest. Now, the minimum raise was only 65. So what Suzy was saying was, providing she got 65,000, that was enough for her to press the button and submit the application. And then obviously it would have been on her, on Suzy, to have sourced the rest of the funds and provided the rest of the funds herself for the balance of up to 155. So the fact we're well over 100,000 now shows we're really moving towards the 155. Now on these pages, you get an overview of the project. You can have a look at the financials, overview of the team. There's then a forum that you can go and ask questions, and Suzy will answer those questions on the forum. There's been some great questions there. And if you haven't seen it, then go there and read the questions, read what Suzy's answered, and that will give you a better picture of what's happening. Then there are these documents down the bottom here. Once you register, you can download the full equity offer document you've heard Suzy refer to. And in that contains all the information you need to make an informed decision. And there's also a separate document, which is all about Suzy's CV. So that all can be accessed from the thumbnail. So this project actually closes on this Wednesday, the 22nd of April at noon. So we're literally down to a day and a half away effectively. And as I say, it's currently at 108,051 investors. So there is room for more investors to come in and bring it up to the 155. So let me just very briefly in conclusion, and then we'll go back to Suzy for any questions, run through quickly the registration process. So if you're on our homepage, and up on the top right hand side, you'll see log in and register. So if you have not already, you'll have to register. And once you do that, you simply have to submit a name, email address, create a password. You then get a confirmation email. And then from there, you will have access then to your account. And then you have to do what we call investor readiness. Now, investor readiness is important because, as it said at the start about compliance, this is not open to the general public. You have to be registered on the platform and be investor ready. So I'm going to take you through all that actually entails. So first of all, you're going to have a short multiple choice test. And this is really just to ensure that you understand the nature of this type of investment. So there'll be various questions that just confirm you understand that capital is at risk. Just to understand, you can't just ring Suzy up on a Friday night and say, hey, you can have money out on Monday. I'm looking to go on holiday. The money's up. So you've got to understand the nature of this type of investing. You're effectively buying shares in the SPV that owns the asset. And then Suzy will buy those shares back off the investors with the projected ROI. So it's important that you understand that and demonstrate that you understand that. We then move on to what type of investor are you. You can invest as an individual, you can invest as a business, and you're asked if you're a restricted investor, high net worth investor, or a sophisticated investor. And that is important that you designate into one of those segments. You then be asked to complete anti-money laundering requirements, so perhaps send a proof of address, obviously your KYC, and then you'll receive notification that you are investor ready, that you've completed the investor readiness. So until you receive this notification, then you cannot make an investment. So I want to make that really clear. Just because you register initially and do your confirmation email, you have to be investor ready, complete the test, AML, KYC, complete those three things before you can actually make an investment. Then we encourage you to look at the equity offer document, and that is the detailed document that Suzy's been referring to the different pages on the different sections, and this really will take you through the whole project and what you'll base your decision to invest on. And if you decide to make an investment, well, then you can go to the investment screen. You can see there £100 is the minimum investment amount. That will get you one share. So you simply insert the amount of shares that you wish, given that they're £100 each, confirm that, continue to payment, and then you move to the choosing which payment method. Some people move funds directly to their e-wallet on the platform. Others prefer to do it via a bank transfer. And if you choose to do that, then you get a unique reference number. So that is the process. Once you've done that, got to this page and selected your payment method, that will then be your pledge for the project. And then once the project closes on Wednesday, Suzy will issue a shareholder agreement, which will go out to everyone to have a look at. Every investor has a chance to read through that. If they have any major concerns or questions, they come back and ask Suzy and her solicitor. We then issue the final one with Suzy's signature. Then it becomes a take it or leave it situation. If investors are happy to accept the shareholder agreement, that then triggers their acceptance and to become part of the project and have the funds transferred to the SPV. And that all takes place within a 14-day period of the raise ending. So I think that covers sort of the registration process, if you like. So again, just highlighting this project does close. It'll close whatever the amount is, because we're already well above our minimum target. So it'll close this Wednesday at 12 noon. So if you have any questions or queries, please get in touch with us. If you have any problems with KYC, again, get in touch with the staff. Has there been any other questions come in, Asher?
No, not at the moment.
No.
Okay.
So I do have one thing to talk about.
Yeah, I was going to say, Suzy, you've done such a great job. There's virtually no questions.
Good, isn't it?
So,
I was going to say,
I'll give you take a minute to wrap up with any last minute comments you want, then we can close the webinar.
Well, it's Asher and I are already working hard on how we do all of our investor updates to make sure that the learning experience is as valuable as possible. So
yeah,
because that's
really
obviously that's half the point of doing it, isn't it? To share the process so that other people who may even just want to build a house in their garden will know all of the processes that they need to go through to enable them to do it.
Mm-hmm.
And if they want to build 2 or 3, well, then all of the extra bits and bobs you have to do, because it's then a development, they'll know how to do those too. Yeah. Who they need, what they need, and how to do it.
Absolutely. So before I get Asher to give his last comments, so how excited were you, Suzy, when we went live and you watched us get to the 65,000 minimum raise on the first day? What was that like, watching the needle?
It was under 90 minutes, wasn't it? I think that was the best 90 minutes of my life so far. I should say having my daughter was probably that, but I think it might have pipped it.
Very good. I hope your daughter is in the background listening to that. I hope she's out in the garden playing.
She's out the garden. We're all good.
Very good. But yeah, no, it was very, very exciting. And we find it's pretty normal that there'll be a lot of people who have been watching it and they've been reading Asher's social media posts. So they have kind of their mind made up by the time you go live. And then others are seeing it for the first time during the raise, and they need a bit of time to read the information and ask the questions. And I think the webinar tonight will answer a lot of questions for people. And then we normally see, again, a spike on the last sort of 48 hours of a raise. So we're sitting at 108,200, which is great to break that 100,000 barrier. And we can go up to obviously 155. So Asher, we're looking forward to another interesting 48 hours. I know you've been working really hard at sort of getting the message out there on social media, etc. But any last minute comments?
No, I mean, obviously, yeah, I'm really excited to, see basically where this project goes. I'm interested to learn on the process as well. I'm actually genuinely, on a personal note, interested in this project. I think it's really, really cool what Suzy's doing. It actually almost makes me think back to uni and wonder why I spent all of that money instead, where I could have been earning it doing this. So isn't that a funny thing? But yeah, no, that's it's a really cool thing to be a part of.
Yeah, fantastic. So thanks everyone for joining. You know where you can get a hold of us. You can get a hold of me at david@leocrowdfunding.com or you have Asher at leocrowdfunding.com and any of the support at leocrowdfunding.com. But again, you can reach out to social media, email, any questions, let us know. But Suzy, thank you for joining tonight. Really appreciate that. And we look forward to the next 48 hours as we wind this project down.
I'll have to be careful because I'm on the roof for the rest of this week, so I will have to be careful. I don't check my phone and see what's happening.
Leave it
Wrong
to
place not to get excited.
Exactly, leave it to break and lunchtime. Absolutely fantastic. No, I'm confident that things will go well. So it's already a successful raise. It's just a matter of how much we get on it, which is great. So, okay, listen, thanks everyone for joining. Hope that's been useful. Go to the website, go to the thumbnail, do your DD, do your research. If you think this is a project for you, then make sure you make your pledge before 12 noon on Wednesday. All the best, everyone. Thank you. Take care. Stay safe.
Yeah. Bye-bye.
Bye.
Bye.